All right, everybody. Good evening. This is Darren Morris with Keller Williams Woodlands and the Haley Garcia Group. I'm here with James Beaver, my trusted mortgage advisor from Envoy Mortgage. Thank you for joining us this evening, and appreciate you being here.
Thanks for having me, man. Looking forward to chatting with you. Sorry about
Yeah,
my weird lighting. I'm in a weird spot for
no, it looks
the
fine,
call here.
and we can hear you just fine too. So
Okay,
that's what
great,
matters.
perfect.
Well, the reason why I wanted to chat with you today, it is the 22nd of May, 2024. Let's get that right because things change so quickly around here. But
Yeah, it's fine.
um, we've had an interest rate drop recently in the past couple of weeks, pretty significant. And to me, it was unexpected. I don't know, maybe you expected it, but for me, it was kind of like, what happened? The Feds didn't drop their rates, and that's what we were kind of thinking that would be the catalyst for the next interest rate drop. So, as an expert in the field, what can you tell us about why or how, or is it going to go down more? What do you think?
Yeah, so that is a common, misconception that the Fed's actions are going to directly impact mortgage rates, and that's really not the case. Certainly, they impact the overall interest rate environment, no question there. But mortgage rates are really tied to what's going on in the bond market. Okay, and so when we're in an inflationary environment, that does not generally tend to be fantastic for the bond market. People would rather invest money in stocks and other more aggressive kind of investment mechanisms. We've started to see a little bit more data coming out in the last week or so that indicates inflation's cooling a little bit, that employment is weakening a little bit. Those are things that point toward a slowing economy, or at least not an inflationary environment, or as much of an inflationary environment, and that has an effect on the bond market. And when the bond market is moving in a direction where demand for bonds is going up, tends to be what drives mortgage rates down. So we're a little bit conflicted in this industry, Darren. When there's
Yeah.
kind of like what some people would deem to be bad news, uncertainty and stability, economically or geopolitically, that tends to favor the bond market, which causes mortgage rates to dip a little bit. So, yeah, we have seen mortgage rates come down some over the past few weeks. Rates are kind of about the lowest they've been, and you know, uh, really probably call it 6 weeks,
Yeah.
something like that. And so that's encouraging. We don't know if it's a trend yet. We're going to see what kind of data comes out for the month of May in June, and that'll help to help us see if there's a little bit of a trend building, or if maybe we're just seeing a little bit of a blip. We'll find out soon.
So let's say I've got a buyer client, and I do have buyer clients, one with you actually right now, and we're
Yep.
going through this. Um, what if they don't have a house yet that they can find that we've been looking for a while, but they do have a mortgage pre-approval letter with you?
Yep.
Would you suggest, I don't know, would you suggest them to go in and do a rate lock right now, and then hopefully we would find a house so that their rate lock was for the rate that's currently in place? Or what would you suggest about that?
Typically we're going to wait until someone has a home under contract to lock in an interest rate, and unless we're seeing a really strong trend where rates are definitely spiking up, um, in that kind of environment, we might consider doing an early rate lock before someone has a home. But in an instance like we're in right now, where we're just kind of bouncing around a little bit, there's not like a clear move upward in interest rates. I would not lock in an interest rate. What I might do though is, let's say that your home buyer was getting quotes on mortgages a month ago. and they've set their budgets based on rates from a month ago, it's probably worth looking at what kind of payment they would have now versus a month ago, because that could affect their budget. It could open up more purchasing power for them.
Yeah, that's exactly what this issue is right now because they're very um, sensitive about their monthly payment. That's
Sure.
what they're
Yeah.
really worried about the most. And so if they say this is going to be my max monthly, well, if the interest rate is dropping, then their buying power is going up, which means we can look at more expensive houses than we
Yep.
have been before.
That's right.
So that helps open up the pool a little bit more to some more inventory.
Absolutely. Yeah, that's absolutely right. It's a great
Great.
conversation to have. So,
Thank you. So, what are you seeing interest rate numbers right now? I know it's hard to tell. It depends on your credit score and all that kind of stuff. But if someone with a decent credit score came into you today and wanted to buy a house, what would you tell them that the interest rate would be?
yeah, there are lots of variables. That's also a misconception. Sometimes people will call us up and say, "Hey, what's your rate today?" And
Yeah.
there's probably a dozen variables that go into that, answering that question, not the least of which is how does the customer want to structure their loan and what do they want to do from a fee standpoint? I would say that most people are probably going to be banging around in the 6.875 to 7.125 right now, depending on kind of the terms that they want to set up on a 30-year fixed rate mortgage. I just quoted someone on that a little while ago this afternoon, where it was kind of ranging in the 6.875 to 7.125.
So we're well below where it was at the peak. I want to say peak of 2024, because of course we're barely into 2024, but
Yeah.
the peak of 2024 so far has been well above 7.5. I
Yes.
don't remember what that was, but
Yep.
uh, we're looking at a pretty significant drop from that peak to where we are right now, which
Yep.
uh, 50 basis points or zero point
Yeah.
0.5% is quite a bit. That's a big drop for us, especially these days. So, do
Yeah.
you? I know it's hard to predict the future, and you probably don't even wouldn't know. But if we keep seeing negative things in the media about, I mean, today I heard that the employment numbers unemployment numbers were going up, so that's bad news. But it actually means good news for what we're
Yeah.
trying to do.
That's right. We're a little conflicted there, and as I was saying a bit earlier, when bad things are going on, our phones tend to ring a little bit more because
Yeah.
mortgage rates do tend to drop. I mean, if we see this trend continue, or if it turns into a trend, I would imagine that we would see ourselves in probably the mid to high sixes sometime this summer.
Okay.
But I can tell you that I threw up my crystal ball a few years back.
Yeah.
We've been saying, oh yeah, the rates are coming down. Probably Q4. I feel like I've been saying that for 3 years now. Probably Q4. But I think that if we do see this trend, the softening in the economy and in the employment market, that we could see ourselves in the sixes here before too long. We'll see.
Yeah. So I'm curious to know, just overall, do you see an increase in applications right now, or have you seen an increase with the decrease in the interest rates and increase in the applications?
Yeah, there's a real direct correlation. I would say we've seen more of a correlation between applications and interest rates than at any point I can recall in my
Mhm.
career, which has gone on for more years than I'd care to admit. But yeah, applications have been up week over week the last few weeks.
Yeah.
And we've kind of seen that this year, or over the last several months. Rates come down a little bit, applications go up, rates go up a little bit, applications come down. It's like the consumers are really dialed in on it. And but
Yeah.
yes, we have seen applications ticking up, and we've seen some more contracts coming in, which is encouraging for sure.
It makes me just what you're talking about. People are watching so closely. If we ever have, which probably will one of these days, have a significant drop into the low sixes or even heaven forbid the high fives.
Slow down
Um,
here.
I know, but could you imagine the tsunami of buyers that are out there that are going to be flooding the market? And I can't even imagine the flurry of activity that's going to happen. Um, I I feel sorry for the people that, I mean, I don't feel sorry, but I'm like, I feel what they're going through. I know exactly what they're going through, but I can also see what's going to happen is that the home prices are just going to skyrocket when that happens. And it may be better. We've been talking about this for a long time. It may be better to just go ahead and bite the bullet and buy a house right now and refinance when and if the market comes down a little bit for the interest rates. We've been talking about that for a while too.
Yeah, we really started to see applications slowing down really in the fourth quarter of 2021. And it hasn't really bounced back all the way in terms of activity to prior to that period of time, which to me indicates there's a lot of pent up demand. That people have been sitting on the sidelines now for a few years, and coming up on 3 years this fall. And I agree with you. I mean, there's not a lot of inventory. Um, there's been a lot of pent up demand.
Mhm.
There will be some kind of tipping point, I would imagine, when rates get to some point. I don't know what it will be, that consumers will say, all right, it's time to do something. Well, with a limited supply of inventory and rates lower
Mhm.
and more buyers coming into the market, yeah, I would imagine that would cause home prices to escalate. Yeah,
Yeah.
we'll see.
Yeah, it's all a waiting game. It's all a guessing and a waiting game at the same time because nobody really knows. But you could kind of, those of us that are in the business and we've been in here for a little while, can feel the pent up demand happening, and it is happening. There's a lot of people renting right now that don't want to be renting. There's a lot of people that are sitting on the sidelines saving their money for that right exact time. That's a good time to go buy a house. So
Yep.
I can feel it. I can feel it happening. I don't think it's something that everybody is thinking about. But there are a couple of things that we've talked about in your office real
Hmm.
quickly before we
Yeah.
go, talking about creative financing,
Yep.
ways to get the seller to actually buy down the interest rate for you. If you're a buyer, you could do that. I know you've got some really decent programs for that
Yeah.
that we've talked about.
Yeah. Yeah, there are temporary buy down loan programs which do involve negotiating with the sellers for some funds that are allocated toward temporary payment relief on mortgages. We've also recently started doing more of those where we as the lender are paying for that. It's called a lender paid temporary buy down. So for the first year, your mortgage payment is based on an interest rate that's about 1% less than what it would be otherwise. And so that's a good way for people to say, you know, we have to assume that they qualify at a higher payment, but for the first 12 payments, their payments based on a rate that's 1% lower than their permanent rate would be. And for a lot of people, they're looking at that as a way to save a few $1,000s over the course of
Mhm.
the first year, and then potentially refinance not long thereafter. And so there are things that we're doing to help people find a little bit more wiggle room in their payment, a little bit more comfort with what their payment would be.
Mhm.
Um, and for folks who recognize, like, hey, I might be getting a really good value on the price of the home right now because there's not as many people buying. I think that it's a nice way to kind of bridge the gap.
Okay. Well, I appreciate your time this evening, Mr. Beaver. As usual, thank you for your
Love it, man. Thanks
wisdom
for having me.
and excellence. And we'll talk to you next time. Thank you very
Sounds
much.
good. Thanks a lot, buddy. Good to see you. We'll talk to you
You
soon.
too.
All right. Bye
Bye.
bye.
And cut.
All right.
Good job,
So we
man.